Hello everyone, welcome back to my channel. In this new video, I'm going to do a trade breakdown of a trade I took during London this morning. It was on the British pound against the Canadian dollar. I shared with you the trade idea beforehand on the weekly outlook video. I told you where the draw on liquidity is and the point of interest that I want to take the trade from. And price did exactly what I forecasted. You can go back and watch that video. A lot of setups are still in play and you can profit from it. Anyways, as always, I used my bread and butter strategy. It's so easy that you can learn it just by watching this video. If you want more details, of course, you can always check my playlist. It's free, it's on YouTube. Please study it if you didn't found your model yet. I'm going to put it down in the description below. And now let's just get started. Now before we start, I want to show you something. First of all, here's the trade. So short it from here and exit it from here. And if we go to the weekly outlook video, so this one right here, I posted it this morning. It is only 3 hours ago, right? I want you to listen to something so you know that this is not hindsight and this is how I actually trade. Again, I repeat, guys, don't sell as soon as price come back to this area right here. Wait for confirmations on the lower time frames. Wait for reversal patterns. Remember the midnight open, so you want to sell above the midnight open and make sure that the setup is aligned with time. Let's go to another pair, and this is the British. So as you can see, I told you to wait for price to come back to that area, that hourly 4-hour fair value gap, and then wait for reversal patterns on the lower time frames, and of course sell above the midnight open. And you will see it in few minutes how that looks like in the chart. So anyways, let's recap the trade, right? So first of all, we cleared liquidity from here, hit this rejection block, and we closed below this BC, right? This bullish fair value gap. Once we close below it, you need to ask yourself, is this a reason for price to use this fair value gap as an inversion and head to the downside? So do we have a reason? Yes, we do have a reason. We have this inefficiency right here. So we cleared liquidity, close below this, and there is actually a reason for price to reject from here. All right, so this is the first thing. Let's go to the daily time frame. On the daily time frame, we have more details. As you can see, we have cleared this liquidity, right? This external range liquidity, and now we are reaching for lower prices. Here is the smart money reversal. So this is a market maker sell model, and I told you when you have an SMT on the smart money reversal, this is a high probability smart money reversal, and price will likely to reverse. And the SMT is with euro against the Canadian dollar. Anyways, price expanded lower, closing below this inversion fair value gap, and now it is using it as an inversion, right? As a resistance. So this fair value gap is offering resistance, and we have a reason, of course, to go to the downside. We have that weekly inefficiency, and here we have a closer area to reach for, which is this daily inefficiency. So you need to frame your trades first of all based on this inefficiency right here. So this is the draw on liquidity if you want to trade intraday. For swing trading, of course, this would be your final or 10 minutes. So this is what we have on the daily. If you go to the 4-hour, things will get interesting. So I told you after price cleared all this buy side liquidity, this trend line, it rejected heavily to the downside. We have an expansion, and I told you to wait for price to come back to this area right here, this 4-hour fair value gap, and it is aligned with, we have a breaker block right here, right? We have an inversion weekly fair value gap, right? So we have a lot of confluences on here for price to reject from, and we have a strong draw on liquidity. I told you to not sell from here as soon as price reaches this area. First of all, you will not have that great RR, right? So the stop loss is unclear, right? You don't have a clear area to put. You don't have a clear area to put your stop loss above, and of course you need a wide TP. So this is why we use the lower time frames. So as soon as price reaches to this 4-hour fair value gap, you need to do what you need to do next is simply go to the lower time frames like the 15-minute and wait for a reversal pattern. I told you also to sell above midnight open. Now, it doesn't necessarily mean that you want to sell from here, no, but at least wait for price to trade above midnight open, right? So you know that there is a good probability that price will not come back to it, right? And in a classic sell day, price will trade above midnight open and expand lower. The opposite for a classic buy day. So what do we have right here? We have a Judas swing to the downside, taking all this liquidity, this filled swing side here, tapping into that fair value gap, that 4-hour fair value gap, and we are inside that inversion, and then expansion lower, displacement to the downside, leaving a fair value gap and closing below this breaker block. So this is a powerful entry model. So here you can take your entry from here, your stop loss maybe above here, or if we want to take an aggressive stop loss, maybe just above the breaker. For me, I want to put it here, but I missed the original idea from here, right? I missed it, so I needed to look for another entry. And of course, we have this market maker sell model, as you can see here. So this is the original consolidation. We have another accumulation right here, and then the smart money reversal happened here, right? So this one right here, this entry is the low risk sell. This one right here is the SilverBullet, or the second stage of distribution. So how you can approach this if you missed the first or the original entry, you can of course go to the lower time frames like the 3-minute or the 5-minute, and you're gonna treat this 15-minute breaker block as your point of interest, as your higher time frame point of interest, and work your way to the downside, just like we did with the weekly inversion and the 4-hour expansion or displacement lower. Anyways, we have an expansion lower, displacement out of this order block or breaker block, I'm sorry, and then leaving a fair value gap behind. So as soon as price retraces to this area, you want to take your entry maybe from the 50%, and you target this original consolidation, right? Maybe if you want to take some profits, right? Once price reaches this area right here, you want to take partials, and your final target is this daily inefficiency. So as you can see, simple. There is no complications in this trade. All I'm doing is using fair value gaps and swing high and swing lows and some period raise to enter from, and that's it. The most important thing, guys, is the time frame alignments. Time frame alignments is very important. Try to frame your trade idea based on at least 3 time frames, right? In our example, we used 4 time frames. We used the weekly, the 4-hour, the daily, the 15-minute, and finally the 5-minute right here. So I believe we have come to the end of this video. If you have any questions, of course, please DM me in my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Happy trading and good luck.